Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 16, 2021. I want to talk about top Indian stocks. So with that we got a couple great companies here. First is Infosys. It's a great Indian company. They're into cloud and really help businesses to grow. And next is SIFY Computers. And these guys are into digital transformation and it's also a great growth story. And last but not least, we got ICICI Bank, ticker symbol IBN. Again, a great bank and good performance. So with that, let's get started and jump into a few of these stocks and see if it's worth investing. So here is the list of Indian companies. These are available in the US exchanges. First is Satyam Computer or SIFY, SIFY. And the way this chart is organized is I got the ticker symbol, the company name, the stock price itself, market cap, sales. It's very important for the company to have good sales and also nice sales growth. I love to see nice sales growth. And also we have 1 year, 5 year, quarter over quarter sales growth and gross margin and net margin. Very important to know companies are really having some good margin. And the debt to equity ratio, this indicates how much leverage, financial leverage and debt the company is taking on. I love to see a little bit lower debt ratio. For example, you got Wipro 0.2 and Infosys 0.1. I like to see lower debt ratios, but it's not always possible. For example, Tata Motors, it's in the automobile industry, and this industry is a little more capital intensive. That's why you see a high debt ratio here. Then we got ROE, return on equity, that tells you the profitability of the company. I love to see this in double digits if possible, but I will take positive when it's available. Then we got RSI. RSI is very important around the timing. If you're a swing trader or a little bit shorter term trader, you got to make sure RSI is below 50 or so, or at least below 50, 55. But if you're a long-term buy and hold trader, you don't need to worry too much about RSI, but still make sure it's not above 60, so that way it's not overbought at this time. You want to make sure RSI is a little bit lower, so you get a nice entry point and there is some margin of safety for you. Then institutional investments is very important. You got to make sure there is a good institutional backing for the company. For some smaller companies like SIFY Technologies, it may be okay to have a lower institutional ratio, but generally it's good to have very good institutional backing. And then you got short ratio, very important. As an example here, we got AZRE, high short ratio. As you can see here, stock has been squeezed a little bit, and this squeezing the shorts at this time. 1 week 19%, one day 4.55%. So you got to pay attention to the short ratio also. Then we got the price to sales ratio. It's a valuation ratio. You got to make sure it's within the normal range here. For example, MakeMyTr, it's a price to sales ratio is a little high, 19.4. So you got to watch out high valuation sometimes to make sure it's not too high. 19.4 is okay, but it's a little high compared to other companies here. Then we got performance 1 day, 1 week, 2 week, 1 month, 3 month, all the way to 5 year. So this chart is organized by yearly performance. The stock on the top here has got highest performance. And then we got also 5 year performance just to see. Sometimes 1 year performance will come great, but the moment you go to 5 year, 10 year, you'll see some stocks drop off there. So that's why very important to know a little bit longer term performance to make sure you got real winners. Then we also need to look at how much it's off from 52-week high. As an example, you may not want to buy a stock which is already at a 52-week high. For example, Infosys, it's a great stock. $20 right now, but it's sitting very close to 52-week high. So it's good to wait for a small pullback. And also, as you can see here, Infosys has got a high RSI 71 that tells you it's overbought at this time. So you don't want to be buying when it's overbought. You want to wait a little bit for a small pullback. But if you're a really long-term trade buy and hold investor, you can buy. You don't need to worry too much about RSI and the percentage from 52-week high. So that's how the chart is organized here. I also indicated few of my favorite stocks here, and the way I highlighted the stocks is really the stocks with the good quarter over quarter growth, sales growth. They're in the bold here, as you can see here. SIFY, VEDL, Wipro, Infosys, ICICI Bank, HDB, AZRE, and RDY. They all have positive quarter over quarter sales growth. That's why they're all bolded here. Then I also highlighted few stocks that I like to buy. As example, SIFY here. Stock is $3.67 and it's done great for 1 year and 5 year. And as you can see here, it's off 38% from 52-week high, and they got a positive ROE. So that's the reason I want to, it's okay to buy at this time. So because it's off, it's got a RSI a little higher. I would rather wait for a small pullback here. Even today it went up, last week it went up. Typically, I like to wait for a small pullback. We always get a small pullback. Otherwise, this is a good stock to buy for long term. Very cheap from a stock price perspective, $3.67. Next is Tata Motors. As you can see here, these guys are into automobiles. They got a Jaguar, Land Rover, and multiple other brands. And this stock has done nicely for 1 year, and they have not done great for 5 years, as you can see here. And they're almost at 52-week high, RSI 65. I would wait for a small pullback on this company, and then I'll buy. Next is VEDL Vedanta, and $14 stock here. They got a good sales growth, as you can see here. A little bit higher debt to equity ratio. And as you look through here, this stock has pulled back in 1 month, 2 week, and even 1 week and 1 day. And they've done nicely for 1 year. They've done nicely for 5 years. They're 13% off from 52-week high. I would buy some VDL because as you can see here, stock has pulled back. RSI is 48, indicating stock is oversold at this time. So it's okay to buy VDL at this price and hold it for a while. Then you got Wipro here. Wipro is again a great Indian stock, $8. I mean, it's been in the single digit for a long time, but it's good sales growth, 3%, not great, it's okay. And they got nice gross margin. They also have a nice net margin. The company is really retaining some of its money. That's why there's a positive net margin. Low debt to equity ratio. I love to see low debt to equity ratio like this, and nice ROE. Company is really profitable. RSI 68, indicating it's a little high from an entry position perspective. You could wait for RSI to a little bit drop off, a little bit around 60 or 55. And as you look through here, stock has not done much for 2 week, and it's not done much for 1 week, and also for 1 day. I think it's okay to buy at this time. Buy some and hold it for a long time. You got a nice pullback in 2 week, 1 week, and 1 day. And this has done nicely for 1 year and also for 5 year. It's a 3% off from 52-week high. That's why you can wait a little bit or slowly accumulate, so that way you don't buy all the stock at 52-week high. Next is YTRA, YTRA, $2.36 stock here. And they have not done great from a sales growth perspective, negative all along. Probably it's a travel company, and these days in India with the COVID, people are not traveling much. That's why I think it's really not great sales growth here. Nice gross margin. I love the gross margin, but net margin is negative. And they don't have too much debt. They can weather the storm. And as you look through here, RSI is 57. Institutions are buying the stock, which is again good. And from a performance perspective, as you can see here, they've done good for 1 day, 1 week, 2 week. They've been recovering a lot, and they're 20% off of 52-week high. I would probably wait for a small pullback here because it's been going up since last 3 months or so, or 1 month or so. I would wait for a small pullback here. Next is Infosys, one of my absolute favorite stock. Is doing great from a software perspective and also some consulting. $20 stock. It's done nicely from a quarter over quarter sales growth and also 1 year and 5 year. Nice gross margin, nice net margin. Companies are retaining the money. That's great. Low debt to equity ratio. That's also great. Nice ROE. I love this ROE here. I think it's best, one of the best in this chart here. But RSI indicates it's overbought at this time. I would love to buy Infosys stock when it's off. As an example, like 1 month ago, company stock dropped. That was the best time to buy. I accumulated a little bit at the time. So I think that's the way to go. All these stocks, they always give some good opportunity to buy. They always crash once in a while. So with that, nice institutional ownership, not great, but it's okay. And as you scan through this here, company has done great from a 6 month, 3 month, 1 month, 2 week, 1 week, 1 day. That's why I like to wait for a small pullback here and buy some. Great performance from 1 year perspective and even 5 year perspective. It's done great. Just 1% off a 52-week high. That's why I feel like it's good to wait for a small pullback and then buy. Next is IBN, ICICI Bank. Also great stock, $17 stock here. It's done nicely from a sales growth perspective on a 5 year and a quarter over quarter basis. The debt to equity ratio is a little high, but for a bank, it's understandable because they typically take out some loan and also use your deposits and go from there. ROE is positive, that's good, 10%, that's a great indication. And as you scan through this here, they've done a little bit not so great for last 2 weeks, 1 week, and 1 day. IBN is a good stock to buy at this time, given RSI is 55, which is okay. It's not overbought at this time. It's good to buy IBN a little bit at this time. And it's done great from 1 year and even 5 year perspective. Next is one more bank here, HDFC Bank, $74 stock. Nice quarter over quarter growth here. And also it's a little bit struggling in 2 week, 1 week, and 1 day. It's okay to buy this stock also a little bit at this price. It's off 12% from 52-week high, but they've done nicely for 5 year and 1 year. Next, we got a couple more here. I will probably skip, AZRE and RDY. They got positive sales growth, as you can see here. But I think as you can see, RSI here indicates AZRE is okay to accumulate at this time. But Dr. Reddy here, a little bit high from a RSI perspective. I would wait for a little bit pullback here. Even AZRE, as you can see here, they've done nicely from 2 week, 1 week, 1 day perspective. I would wait for a little pullback here and then buy. So with that, let's go into few of these stocks in a little more details. First is SIFY Technologies. They provide integrated solutions and services in India and internationally. They have cloud managed services, telecom services, and so on and so forth. And as you can see here, earnings per share is doing nicely. In 2020, probably with the COVID, it dropped a little bit, but overall, nice earnings per share. It's positive. And from a sales perspective, I love this. They're doing nicely, consistently higher. It's good to see companies doing great sales. And from a share outstanding perspective, they've done pretty good. But off late in 2020, it's a little bit higher. Not a good concern to me at this time because sales is going pretty nicely. So I think this is okay, not a red flag at this time. And from a news perspective, looks like they are doing okay now. There is no shortage of growth. That's a good story here. And while long cash advisor reduced the stake, looks like some of these advisors reduce the stake here. And I think stock is overall doing okay. And if you look at the numbers here, fundamental perspective, great sales growth. I love this. A little bit high debt to equity ratio, which is okay, not too bad. They've done nicely for 1 year and even 5 year. And RSI, as you can see, 62, little higher. But if you're a long-term buyer, you could buy some. Otherwise, you can wait for a small pullback here and then buy. And from a fundamental perspective, from a trading volume, it's around 309 494,000 shares traded. It's not super liquid, but it's okay. It's a pretty good volume here. They got good cash, but a lot of debt. I would love to see this debt a little bit lower, but I think it's manageable at this time. They got very good growth estimate for next year. That's always good to see. And they have a lot of free cash flow, which is also good. And they're above their 20-day moving average, above 50-day moving average. And their 50-day 120-day moving average is $3.12, which is again lower than current stock price. So overall stock is in a positive territory here. So with that, let's jump in and look at the stock chart to see technically if this is a good story. As we look at the technical here, we got SIFY Technologies here. It's a 1 year chart, as you can see here. Nice looking chart. I like this. Company's doing nicely. It's you know uh, trending well at this time. It's got its ups and downs, as you can see here, but generally trending okay. From an RSI perspective, it's 56, a little bit on the higher side. If you want to buy, you can wait for a pullback. It always gives you pullback, as you can see here. Pullback here, one more here. So it always gives a pullback. I think we had a pullback here. It's trying to go up at this time. It's okay to buy at this time because it's almost you are at the lower level here. We had a small two positive candles, not a big deal. From a implied wall perspective, IV percentile, we got a high IV percentile, 96.5. So, one way to do is really you could even sell some put option if you want to, but I would not do that because stock price itself is very low, $3.67. But if you want to buy put option, sell put option, you could do that because IV percentile is high. You can buy some put option maybe at $2 or so. If the stock hits $2, you could buy the stock outright. Otherwise, you can keep the money because high IV percentile. Then as you look at the DMI here, DMI currently indicates it's in a negative bearish territory because the red line is above the blue line, but the distance is not too much. So it's a minor bear type market here, but I can see this blue line going above red line because distance is very low at this time. From a volume average perspective, I think it sold off pretty hard with this decline here. It's trying to become flat to positive now. And from a check-in money flow perspective, I think money flow is also pretty not great, but it's pretty steady here. So overall, from a technical perspective, I feel like it's okay to accumulate the stock at this time. Even the good entry was somewhere here. We had 2 or 3 good nice days here, but it's okay to buy a little bit and hold for a while. Next, let's look at Tata Motors, TTM. These guys are into automotive. They got pickup trucks, dump trucks, and also Jaguar Land Rover. As you can see here, they raised some money here, which is good with the low interest rate, and looks like they are swinging to profit in China, also good. So overall, from a news perspective, I think it's a good news here. They boosted the sales in China, which is also good. And from a sales perspective, I think it's a positive sales growth here on a yearly basis. I like to see that. It's good. And if you look at the stock itself from a fundamental perspective, $23 stock, they're off 3% from 52-week high. They've done nicely for 1 year, but negative for 3 year, 5 year. And nice gross margin here. I like that. And right now, sales growth is negative, so not a positive sales growth. So with that, I would probably wait to buy this stock a little bit, given it's just 3% off of 52-week high, and RSI is a little bit high. But if you're a buy and hold, you might buy a little bit, but don't buy a lot because it's almost at its 52-week high. And as you see the volume here, great volume. I love this volume. 1.0 million shares traded, always good. It's liquid. They got a lot of cash, but also a lot of debt. That's why debt to equity ratio is very high, and free cash flow negative at this point. They're also spending money on R&D. I always love companies to see companies spend money on R&D because that helps a lot with the product development itself. And they are above their 20-day 50-day moving average, and they're also above their um, 120 and 200-day moving average. So overall they're in a positive territory. They're trending up nicely. They have done 14% for 10 years, as you can see here. So with that, let's jump into technical side, see how is it looking from a technical perspective. As you can see, your chart is pretty much trading range for most parts since last couple of months. That's why you would not want to buy any. You don't want to buy any call option here with this flatlining trading range. You won't make too much money with the call option. But if you want to sell some iron condor, which may be okay, and even put option selling is okay, I'll be percentile a little bit high. I would buy the stock on a pullback here versus buying at this time. If you look at the RSI here, it's 47. So from an RSI perspective, it tells you it's okay to buy at this time because it's over sold at this time. It's okay to buy a little bit and hold for a pullback. From a on the balance volume perspective, from a DMI perspective, as you can see here, we do have a positive crossover. So it's in a little bit bullish territory at this time. That's why it's okay to buy a little bit. There's a bullish crossover here, and volume average perspective, it's pretty steady. It came down, but now it's trying to go up a little bit. That's good. From a check-in money perspective, looks like smart money is flowing into the stock. That's why it's in a positive trend here, trying to go up. That's also good. So with that, I would buy a little bit of Tata Motors and then wait for a little pullback and add more to the position. Next is Vedanta. They operate a diversified natural resources in India. They got extract, produces, processes, oil, gas, zinc, and so on and so forth. So I think from a EPS perspective, earnings per share perspective, they've done nicely before, but right now they're negative. Company not making any money at this time. From a sales perspective, pretty okay. Not great, but it's okay. They got good sales here. And from a shares outstanding perspective, no red flags here. It's pretty good. And from a news perspective, looks like they announced their fourth quarter results, which is good. And overall, I think there is nothing really negative here. And from a fundamental perspective, it's a $14 stock. As you can see here, they've done nicely for 1 year and even 5 year. They're 13% off of 52-week high. RSI is 48, which indicates it's okay to buy the stock at this time. Debt to equity ratio is a little bit higher, so which is okay for this type of business here, capital intensive business. And from a fundamental perspective, I think we got good amount of shares traded, around 960,000 shares traded, which is good. They got good cash, $4.8 billion. also good debt here. I'd love to see debt lower, but for this industry, it's probably okay. They got a lot of free cash flow, which is good. They also pay a good dividend, as you can see here. And they are below their 20-day moving average, barely above 50-day moving average, and they're at this time they are above their 120-day moving average. So overall, I feel like it is a good one. You could buy with this temporary weakness here in 1 day, 1 week, 2 week, 1 month weakness, and wait for a nice pullback. So from a technical perspective, as you can see here, stock has sold off for last month or so. As you can see here, trying to make a positive comeback at this time. RSI is trying to show it's gaining some momentum. That's always good. And also, as you can see here, implied wall is 90, so which tells you it's okay to sell some put option if you want to sell. Stock is $14. You could buy stock outright also. And from a DMI perspective, I think company is trying to make a bullish crossover here. I like to see this type of bullish crossover. So if you buy now with this bullish crossover happening, you could see price going up. And from a volume average perspective, it paints a different picture here. Looks like it's going down. We would love to see volume average going up. From a check-in money flow perspective, smart money is kind of thinking what to do. It came out a little bit. Now it's kind of flatlining, as you can see here. I think overall, from a technical perspective, chart is kind of painting two different pictures. One way it's good from a RSI perspective, gaining momentum here. From a DMI perspective, gaining momentum. But on the other side, from a volume average perspective, it's telling, hey, it's not so great, don't need to rush here. So with that, I would probably buy a small position here, wait for a pullback and then buy, because all the indicators are not showing a positive way. But it's understandable. Many times you can't wait for all the indicators. You could go with at least a couple good indicators like RSI here, and probably even the DMI. So I would buy some and hold for a while, add on the pullback. Next is Wipro. Wipro is one of my favorite companies here. Very steady Eddie type company. They're into IT consulting and whatnot. Nice earnings per share, very consistent. That's great to see. Nice sales, very consistent, and shares outstanding. I think it kind of fell down a little bit. That's also good to see. No red flag here. And they also expanded their partnership with the Levi. That's also good. They are worldwide SAP supply chain ecosystem leader. That's also good. I think overall positive news here. And stock itself, as you can see here, fundamentally good. They got nice sales growth, 1 year, 5 year, quarter over quarter. I mean, not great, but positive growth here. Nice growth and net margin, and they've done nicely for 1 year and 83% for 5 years. It's a low price stock, $8. I think it's pretty good that way. It's kind of gives you that steady growth, and no need to worry too much. You can sleep peacefully at night. And from a volume perspective, great volume. I love this volume. 2.3 million shares traded and 1.5 million shares traded in last 3 months. They got a lot of cash, $4.7 billion, and a lot of I mean, debt is okay. It's manageable, not much at all. And they got a positive next year's growth here, growth estimate. That's good. Nice free cash flow. And as you can see, they also pay some dividend, which is not too bad. And from a ROA perspective, it's positive, and from a ROE perspective, also it's positive. So company is profitable. That's a great thing to see here. They're just 3% off of 52-week high, so that's why you can buy some here and wait for a pullback to add more. From a chart perspective, as you can see here, I think stock has not done great for last month or so. As you can see here, trying to recover at this time. And RSI is telling us it's gaining some momentum here. That's good to see. And from a DMI perspective, so that's telling you it's bearish at this time. The blue line is below red line, and the gap is pretty significant here. That tells you this is in a bear market at this time. Volume average is kind of trickling down here. We love to see this going up, but check-in money flow is telling us smart money is flowing into the stock. So with that, I would probably buy this stock on this pullback here, and wait for more pullback to add more. Overall, I feel like it's a good story. You can't go wrong with Wipro. It's a steady Eddie company. It always gives you some good performance over the long time. Next is Infosys. It's also one of my favorite here. Great company. They are also into software consulting and product development, and artificial intelligence, cloud, you name it, they're into it. And nice earnings per share. I love to see this earnings per share here going up constantly. Sales going up nicely. Shares outstanding kind of reducing. Always good to see this. And they got some positive news here. They're helping the COVID vaccine, which is very much needed in India. And they also they got selected by this company here, which is good. And they also help with some of this global tennis ecosystem with artificial intelligence, immersive 3D, which is good. And from a fundamental perspective, I think they got share price is $20. Nice sales growth. I love this sales growth here. And low debt. It's also good to see low debt. For a company like Infosys, ROE is 25%. That's good. And also ROA is 17%. So company is profitable. That's a very good indication here. Low debt, as you can see here, and RSI is a little bit high, and they're just 1% off 52-week high. They've done great from 1 year perspective and 5 year perspective. From a performance perspective, I would wait for a little pullback, but if you're a long-term buy and hold investor, you could buy this company, hold it for a long time. Otherwise, you could wait for a better entry point. RSI being 71, it's at a overbought territory at this time. And stock is has a very good trading volume, 5 and 6 million shares traded. That's very good to see. They got nice cash, $3.7 billion, and low debt. That's good to see. And they also have a good growth estimate for next year. They also pay good 2% dividend, which is also good to see. And they are above their 20-day and 50-day moving average. They're also above their 120 and 200-day moving average. Nice margin here, and they've done nicely for 10 years also. So you can't go wrong with Infosys. Only suggestion I have is really wait for a little bit pullback here and then buy the stock. And if you look at the chart here from a technical perspective, chart is really doing solid here. As you can see, very nice uptrend here. They're above their 9-day, 25-day and 50-day moving average. If you look at the RSI here, RSI is telling you, hey, wait, it's overbought at this time. So that's why it's above this line, 70 line here. Normally, if you look at the stock here, it's been below the overbought territory for longest time here. So that's why I want to see this come below this line here. Maybe below around say 60 or so. That's when I would buy this company. Implied wall, as you can see here, it's 65. So if you want to sell some put option, you could do that, and you could pocket some premium. DMI perspective, it's solid positive here. Red line is way lower, blue line is way above here. Solid distance in between. Companies clearly in the positive bullish territory at this time. On the balance, volume is way higher, very positive trend. Smart money is pulling into the stock, piling into the stock. So if you're a long-term buy and hold investor, you could buy some. Only recommendation I have is really wait for a small pullback. Let this come in below the this line here. If it is below 60 or even say 65, that could be your good entry point. But otherwise, all the lines are clear for this, all the indicators are good direction here. But only thing is, entry point wise, I'm not super happy. So next is ICICI Bank, ticker symbol IBN. They provide banking product and the digital banking. I think it's also a great company. From an earnings per share perspective, it's positive. Nice sales. I love this sales growth here. And shares outstanding is pretty steady, not a negative sign at all. And I think they got some good news here. One of the blue chip stock, which is good to see. I think overall, they did well. They got a good earnings also here. And from a fundamental perspective, I think they've done nicely. Quarter over quarter sales growth is nice, 11%, and net margin is 13%, which is positive. And they've done nicely for 1 year and 5 year. RSI is 55, which indicates it's not overbought. You could buy the stock at this time and hold it for a long time. They're 6% off a 52-week high, which is, I think, it's good enough. They've been down for 2 week, 1 week, 1 day. It's okay to buy some and accumulate. From a volume perspective, solid volume, 3.8 million, 6.3 million shares traded, very liquid stock, and they got nice. I think they got nice cash, $20 billion. It's a bank; they need to have cash anyways, and they got a little bit higher debt also. They have a growth estimate of 22% for next year, which is great. I think that's why you can buy, because even RSI indicates it's okay to buy. And overall, I think ROA perspective positive here. Probably for the banking sector, you don't expect a double digit like software. So overall, I feel good about this company. You could buy this stock and hold it for a while. So if you look at the chart here, so its chart is kind of up and down type chart. Right now they're in a bearish territory. The stock is trying to take its 9-day moving average, use it as a support, and go up, which is good. It's trying to recover from this sell-off here. RSI is trying to gain some momentum here, which is good. And as you can see, your implied wall is 9.6. If you want to buy call option, you can buy. You'll not be paying too much here. From a DMI perspective, it's in a bearish territory at this time. But good news is red line is trying to come down, and the blue line is trying to go up, and the gap is closing pretty quickly. That's a good news here. And from a volume average perspective, I think I see nice uptrend here. More people are buying this stock, which is always good to see. And from a check-in money flow perspective, I see smart money is trying to flow into the stock, which is always good. So with that, I feel good about this company here. You could buy this stock and hold it for a long time. So with that, thank you very much. Happy investing and trading, and thank you.